In what could be India's biggest ever IPO, Hyundai Motor is looking to offload up to a 17.5% stake via the initial public offering of its India unit. Now, according to draft papers filed with Sebi, the carmaker aims to raise $2.5 to $3 billion or around 25,000 crore via the share sale at a valuation of up to $30 billion. Hi, I'm Meghna Chadda from The Economic Times, and here's everything you need to know about the mother of all IPOs. Number 1. About the IPO. Now, Hyundai's IPO will make it the country's first car maker to go public in 2 decades since Maruti Suzuki listed in 2003. It could be one of the largest IPOs in India following the Life Insurance Corporations of India's $2.5 billion issue in 2022. Number 2. IPO route and size. Hyundai will not issue any new shares in the IPO. Instead, the South Korean parent will sell part of its stake in the wholly owned unit to retail and other investors via the OFS route. According to the draft prospectus, the company will offer up to 14.2 crore equity shares for sale in the IPO from a total of 81.22 crore shares. Number 3. Offer structure. A maximum of 50% of the shares issued will be reserved for qualified institutional buyers, 35% for retail investors, and 15% for non-institutional investors. Talking about IPO timeline, bankers have indicated that the IPO is likely to be launched in the next 4 to 6 months, subject to Sebi approval and market conditions. Lead manager and registrar. So the book running lead managers for the IPO are Kotak Mahindra Capital Company, Citigroup Global Markets India, HSBC Securities and Capital Markets India, JP Morgan India, Morgan Stanley India. KFin Technologies is the registrar of the issue. Now, why is Hyundai Motor going public? Hyundai Motor is opting for an IPO to capitalize on the growing market potential in India and to enhance its valuation. The decision to go public is also influenced by the company's strategy to address the Korea discount. Now, this is a term used to describe lower valuation multiples of South Korean firms compared to their international counterparts. By listing its India arm, Hyundai aims to unlock higher valuations and attract a broader investor base. The listing will put Hyundai India on a stronger footing compared to Maruti Suzuki and Tata Motors and its other rivals, as it could make future fundraising easier without the need to depend on its Korean parent. Hyundai can also use the new richly valued shares to strike deals with India, where it wants to sell more expensive cars and increase the shares of electric vehicles. Now, talking about the potential benefits and risk for investors. On the benefits side, Hyundai's strong market leadership as the second largest car maker in India, coupled with its successful SUV lineup, provides a solid foundation for continued growth. The company's consistent revenue and profit growth further enhances its reliability as an investment. Additionally, Hyundai's substantial investments and modernization plans reflect a long-term commitment to the Indian market, which is the third largest for Hyundai Motor Group globally. However, potential risks include market volatility, as the success of the IPO depends on favorable market conditions and broader economic factors that could impact its performance. Furthermore, intense competition from other automakers like Maruti Suzuki, Tata Motors could affect Hyundai's market share and profitability. Overall, the Hyundai IPO is expected to create a more dynamic and competitive environment, promoting both Maruti Suzuki and Tata Motors to innovate and adapt their strategy to maintain their market positions. That's all in this video. Thank you for watching.